Hello everybody, welcome to mentfx. This is episode 7 of the entire masterclass, and seeing as we just hit 50 subscribers and seeing as we've just covered a lot of in-depth information concerning this kind of the start of institutional order flow, especially for beginners where there's a lot of stuff that has been covered, and for people that are potentially more experienced with this, have just learned or maybe picked up on a few new things in the last few videos as we've started kind of from scratch, walking ourselves through it, okay? So today we're going to be looking at a trade that we did catch that I went over in one of my videos, but we're going to get deep into understanding how it worked, why it worked, and how you can start to frame the ideas and concepts that you have learned thus far into potential trading strategies and catching real trades. Because despite not knowing everything about this market, you have gotten to a point right now, and you most likely have gotten to a point where you understand concepts to a point where you can actually begin to trade some of these ideas, put them together, start keeping a journal, and start noticing movements in the market and how your predictions and directional biases respond to them. Okay, so again, this is a video where we're just going to go over an example. We're going to talk through the ideas that we've covered thus far, that is order blocks, imbalances, liquidity, fake outs, emotional trading, retail knowledge, retail trading, how retail is getting stopped, how retail is thinking, how we are seeing the footprints of the banks, how we are following them to get into trades, and how we are framing our risk management to continue and catch very big moves, okay? So sit back, relax, try to maybe pause the video at some points to try and understand what it is I'm looking at, but we are ultimately going to look through and walk through what we are looking for and how both sides of the market are looking at this trade right here, okay? So, to start off with, as we first take a look at this, we can easily see that we're starting to break down from this high right here. In retail sense logic, we were in this longer term uptrend that has just started to finally break, and we're now starting to finally see older support become resistance and hold very well. We're now seeing new support form that has just blown through, basically expecting that there's probably going to be opportunity to sell here. As this trend is beginning to go downwards, in a retail mindset, we are seeing this trend line begin to unfold, right? That's the 1-2 touch. So we are expecting downwards momentum on this price. So the cool thing about this video is we're about to put together what you probably have already learned in the form of retail trading and how you've been trading. And we're going to partner that with our way of looking at the market institutionally, right? You don't need to know everything institutional-wise to trade the market successfully, okay? You can start to develop a trading strategy and understanding the market around what you've learned thus far. Of course, we're going to get deeper in the future, but this is going to be a video allowing you to start understanding what it is we're looking at in the market and why the market moves the way it does, right? How liquidity is formed. So we have begun to create these areas that make it look like the market is now starting to go down, right? We have this trend line that's now starting to form. We're seeing that 1, 2, expecting that third touch here before that continuation lower where we most likely want to sell, especially that it lines up perfectly with this resistance, okay? Some people are looking to sell when it comes up here with the retouch. And what you also have to notice, okay, here's something that's very big and important and might be even another perspective shift that might come with this video, is that areas like these, right, are fractal in nature. So on a lower time frame, this right here is starting to look like a new development of a downwards trend, meaning what? There's liquidity starting to form up and above all these highs here, right? So if we jump down just for a second onto a 5-minute chart, for instance, you can see how after breaking all these lows down, we are starting to actually form a downwards trend here as well. We have this 1, 2, third touch. So people on a shorter time frame are looking to get involved in these markets right here for that third touch, potentially to come even lower, looking to take out lows here, looking for this resistance to get, to hold. Ultimately, what you have to understand is trillions of dollars travel through this market every day. So you know for a fact that on every time frame, there are traders and people that are looking at this market, getting emotionally involved, getting retail involved, algorithmically involved, however it is, there are people getting involved in this market. That's why it's such a liquid market. That's why it moves the way it moves versus like stocks and other markets like that. So as we start doing this, please consider the idea of what's going on a lower time frame, because there's not just people selling at this area, and then maybe at this area. There's also people selling at these resistances, at short-term resistances in here as they're getting stopped out, at short-term resistances and supports inside of here, at trend lines that develop on a lower time frame within areas like this that get broken, that get retested. There's You can get a ton of information out of just a single candlestick on one time frame and understand what's going on, right? As we start to progress and get better at understanding things institutionally, looking at one daily candle and then the next can give us an entire view of what happened during that day within those 30-minute time intervals and how price might have moved, right? And that's going to ultimately work its way up to becoming a quote-unquote professional institutional trader, okay? So from an institutional, from a retail perspective, there's a downtrend forming in here. There's a downtrend forming here. Old support is becoming resistance. People are looking to start trading these areas, and they believe they're going to hold because they've seen it happen in the past. They're seeing structure unfold downwards, expecting downward pressure from here. Okay, people are already getting into sells here because they're emotional and they don't want to miss out on these trades, especially with this huge drop. And you can just imagine for a second how that drop looks on a lower time frame. People are seeing this, expecting that price is going to continue dropping all the way down here, right? Since it has a lot of movement to go, potentially into these areas of support, okay? But institutionally, what is it that we see right now? Institutionally, what we see is we see some equal highs that are being printed right here, right? These equal highs above them, what do we understand lies above them? Well, we know there's a ton of stop losses. There's a ton of stop losses and buy stops above here. So we know that if price does come up here, it's going to be so that the market or the market maker, smart money, can grab those orders before taking price significantly lower, right? So institutional order flow might be downwards too, right? This is why a lot of the time, if you're trading retail and you think you know where the market's going to go, and then you get stopped out, it continues going that direction. And you're just sat there wondering how you got stopped out and why didn't you get involved. This is one of those reasons. So from an institutional perspective, we know there's equal highs here. We have this trend line that's forming, so we know there's liquidity lying above all these areas here. And we understand that on a lower time frame, we're beginning to form liquidity here, and these areas are becoming of interest, right? So in our mind, we see this fair value gap that actually, or imbalance that we know needs to be filled over time. We see this fair value gap, which we know might get filled, which would make sense in terms of grabbing these equal highs to go to continue lower, right? So on one of my comments on one of my videos, somebody asked about smart money concepts and why they don't always work, okay? The thing is, smart money concepts are not always going to work because then it will be too easy for other people to trade that same thing too, right? Like for instance, this right here was an order block, okay? And this right here was an imbalance. And guess what? If you were trading smart money, you might have been able to get a buy off here. But also understanding smart money structure, you'd know that we just distributed and we're looking to actually continue going lower, right? There's multiple things that we have to look for in smart money, even if it might seem easy. So this move up was actually an order block, right? So we went above all these highs. So if price did come up here, we could be looking for sells. But right now, all we're interested in is seeing this imbalance right here filled, seeing these equal highs potentially get taken out, and then we can see what happens from there. Because we understand that liquidity right now lies above all these highs here, lies above all these highs right here on the short-term time frame, and above this trend line right here, right? Okay, so let's take a look at what happens and start walking ourselves through. So price begins to continue to drop. Now imagine this still on a lower time frame. You have to consider the fractal nature of this market. As this market is beginning to show even more downward pressure, people retail-wise, or people that are emotionally trading, right? It doesn't have to be retail people. There's only like 5% of people that actually trade quote-unquote the retail way. But if you think about it, the participants in this market are trading under the same logistics and retail mindset as most retail people. So when they start seeing things like this unfold, their emotions are telling them one thing, right? I bet that people that are used to trading retail are now seeing the exact same thing with these support and resistance areas, anticipating these tests, anticipating the movement from this third touch of the trend line potentially, maybe even anticipating lower prices from even here, looking to go lower into some kind of area down here, with no real idea as to why this might work, okay? So also what you'll notice is there's some, this is how price is, this is how liquidity is created in the market with candle patterns that look like dojis, potential reversals, and continuations downwards. People want to get in on this, and there's constantly tons of orders being laid into this market that are being injected, right? And why are they being injected? Because whoever's behind the price is creating an opportunity for those that want to continue to see price go lower to continue selling, so that what can we do? Take price higher to grab all those, fill in for efficiency in all these imbalance areas, potentially come even higher to grab liquidity above equal highs, anticipating or having retail anticipate that a retest of this trend line would mean an upwards movement, when in reality we're doing this to collect all the moves here, to collect all the people that want to buy here to continue lower, right? Okay, so now that we understand that, let's continue watching what this market wants to do. Okay, with the understanding where liquidity is right now, where inefficiency lies, where some more inefficiency lies, and see what happens. So price creates a little doji, and then drops. Okay, so for a lot of people, retail mindset again wise, this is a continuation downwards on a lower time frame. Continue to consider that fractal nature. This trend line is now holding. This trend line is now becoming this trend line right here. So there's a ton of liquidity that's being created above all these highs on a lower time frame. So if we actually just take a look at that very quickly, as you'll see, let's get rid of all that. Let's just jump down a little bit lower. You'll notice that people that are scalping throughout the day are starting to see the development of this trend line right here as well. That's actually being held relatively well. So people are looking to continue selling this. You're seeing a lot more bearish pressure than you are bullish. In a retail mindset, of course, they don't want to miss out on this move that they might have missed out on all the way back here. And there's now starting to see this real downtrend form because of how strong it's been dropping. So people are starting to sell. And in a smart money wise, we can be anticipating there's some accumulation happening here with a selling climax, automatic rally, ST&B, maybe a spring. And we could be maybe anticipating some movement upwards for some buys at these areas, right? With the idea of real breaks of structure that are based on Wyckoff, with accumulations that are testing the springs, which of course are order blocks. But we're not going to concern ourselves with that now because we're just going to continue watching and understand what's going on with price. We're not that far ahead yet. So again, tons of liquidity being created here, areas that need to be filled here. People are watching this resistance area to sell at. Okay, so let's continue playing this. Okay, so here we go. We have our first huge move up that does what? This huge move within just a little bit of time has actually just taken out all the highs here, all the highs here, 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 and just hit this area of resistance, okay? So in a retail mindset, what do you imagine is most likely happening right now? Well, people that don't want to miss this move down from this resistance or from this trend line are starting to get into sell positions at this area, right? So keep in mind that on a lower time frame, right now, we most likely have a lot of potential candles forming that are making it look like it's going to be a downtrend, right? Like this pin bar. If we continue playing price a little bit, we have this up movement, this rejection, another like pin bar, whatever you want to call it, maybe some kind of shooting star, this continuation lower. Now is when people want to get involved in this market. They're seeing this pressure downwards. They know that they might be missing this trade if it doesn't come up to this trend line right here. So they want to get into these sells, okay? So there's tons of retail that are now trying to get into the sell. And don't lie to me, I know that you for sure have done the exact same thing as a retail trader, especially with this huge wick that is now respecting this area, right? And now what's funny is if you start to consider smart money concepts, what you'll notice is this area of imbalance is now being filled. So you might even get afraid of missing this downwards move and start getting into this off the imbalance that's getting filled without recognizing that there's liquidity that's laying above here, that there's liquidity laying in here, there's an order block here that has not been tested yet, and that we have a trend line here that is being quote unquote seen by all these other retail traders. So this is why sometimes smart money will fail. People might be looking at this as a mitigation block with a fill of imbalance without recognizing that there's a ton of reasons that retail wants to go short here. Okay, so let's see the next candle. Next candle prints a doji that actually, as you can see, barely tests this trend line. So what can you imagine is going on with retail traders right now? Emotions are starting to set in extremely heavily. People are trying to get into these sells, trying to sell even more and more. People are selling here, are selling in here. We're selling in here, here. Everyone's starting to sell, trying to anticipate this movement down to catch it because they don't want to miss it, right? Because they know it's going to go down, especially with this touch of the trend line. Additionally, other people are saying, okay, so this maybe wasn't the resistance. This is that short-term resistance. So not only is, resist support that now became resistance holding here, but it's also holding inside of here. You see all this bearish pressure that's keeping these bulls inside of this area. For retail, this shows a lack of movement to the top side so they can continue getting into sells. So everyone's loading up on sells. And then if you even think about lower time frames, same thing is happening. People want to be getting into these sells as it's starting to, respect this area. So let's go back to a higher time frame and keep watching. Okay, what do you think every retail, even you maybe right now as you're watching this video, is thinking right now? Well, this is now continuing downwards off of an indecision candle that has now broken back out of this resistance, that has broken off of this third touch of the trend line. So there is no reason not to be selling right now, right? Wrong. Smart money wise, we still understand that we're looking at certain areas up here in terms of imbalance, in terms of order blocks, in terms of equal highs that we know have orders resting above them, and all these areas that are now being looked at by resistance, by retail for opportunities to go short. Now, at this point, you had tons of people that were selling up here. You have tons of people that are now selling on this candle, trying not to miss out on the move that might come all the way down here, right? And what you also have is on a lower time frame, you have a ton of people looking at this downward movement as a new break of structure, potentially looking for that continuation down after the test, right? So let's see what happens. So it keeps going down, and now, again, put yourself into the mindset of an emotional being, or put yourself into the mindset of what you used to be like when you traded retail before you were introduced to this whole idea of smart money and understanding where orders might lie with footprints, right? You're seeing this as potential miss of an opportunity. So you're starting to load into sells here with your stop loss above this, right? So your stop loss is already very big, anticipating that the move down might come to maybe this support area here. So you're like, okay, maybe I can make 1 to 2, because if you even consider this sell right here, that sell alone is only literally 1 to 1.38. It's already terrible risk to reward for you. Okay, so you're anticipating that, and a ton of people are afraid of missing out on this trade, so they're getting involved in it. Okay, let's go back to the 30 minutes. Let's stop going up and down, and just understand that on a retail mindset, on a low time frame, a lot of things and emotions are beginning to pile up that people don't want to miss out on. This retest of the resistance is getting more people to enter into sells, right? This does the same thing as the previous one just now did. We have a new engulfing candle of the body, whatever you want to call it, that's now continuing even lower. People want to get in on this. All this is, for now, in smart money wise, all liquidity for us to want to grab. Okay, lower prices again. We test it, lower prices. What's next? Even lower prices. Now, even though this candle ends like this, and some people retail wise might start to think there might be a buy option here, what you have to recognize is during those 30 minutes on lower time frames, this was a continuation downwards. So many people were continuing to sell into this, right? And what happens when people sell? Well, we put stop losses and most likely buy stops above those, right? So above these, above all these areas here, above all these areas here, there's tons of people that are buying and selling all in these areas, right? There's just more sellers. So when I ask you the question that we've asked ourselves multiple times when we've looked at the idea of liquidity, where do orders lie right now, liquidity wise? Well, this inefficiency got filled, but now we have liquidity orders that actually lie above this high, above these short-term highs, above this high right here, above this high right here, which is equal highs, and potentially maybe even above here. But we have to recognize that there were highs here that got taken in the form of this order block to continue lower. So we have this order block right here. So what we can do from a retail mindset, from an institutional mindset, is we can note this area down in case it ever gets touched and watch it from there. Right, so this is that important area that we can look at. Let's just let's give it a little color. Let's make it a little bit bigger so we can just see it, right? Just like that. There we go. Okay, so we can be watching that area for the future. But what do you think is happening? People are selling. A lot of people are selling, especially emotionally with FOMO setting in. Everyone doesn't want to miss this move, so a lot of people are starting to sell extremely heavily. Okay, so let's see what happens. Again, we have this move down with indecision. Lower time frames, what's happening? More people are selling. More people are loading into sells. Okay, I'm gonna stop talking about lower time frames because we've done it a few times. If you have more questions, please ask me below. But the idea is you understand that many people are starting to sell this, especially with this resistance that's being held. Okay, so we can get rid of this resistance because these are the important areas of resistance we're looking at right now. People are seeing these sells. They're getting in. Okay, they're getting into more sells, and boom. Right now, from a institutional standpoint, we can make notice of what is happening here. Okay, what's happening is we just went all the way up to do what? To clear out the highs here and to create more liquidity above these areas here. So some smart money concepts or smart money people might say this was an order block right here, and they could be selling this as it filled this imbalance. But notice that why this might be wrong, right? Because we don't know if this is the order block that's over, right? We understand that smart money is beginning to buy into this to take out all the orders above these areas so then they can go lower, right? We don't know if they want to come here or if they just want to come up to above these areas right here, filling in maybe 50% of this imbalance before going lower, right? So we have to still be on the sidelines, understanding the reasoning for why price is shooting like this. But again, why did it shoot up? Because now we're starting to grab liquidity. Okay, so let's see what happens. Continue downwards, continue downwards, continue downwards, and we drop. Okay, so now, from an institutional standpoint, we understand that despite these equal highs here, right, equal highs do not always have to be grabbed. What we have to understand is, yes, there is liquidity that lies above here, okay? There is. And there is this order block potentially and this area of imbalance that needs to be filled in the future. But what the short-term is telling us is that we just took out liquidity in the form of this trend line. People started buying right here, right? Because remember, on a lower time frame, there's most likely some kind of liquidity creation in this area before this continuation downwards, okay? So what we have to understand is what we just formed is actually a new order block right here, right? So this is not our area of interest anymore. What we have to understand is we cleared out liquidity in the form of this trend line. We cleared out some liquidity in the form of the people that were selling here. People got scared and maybe closed out of their trades. We loaded up on enough sells to take price lower. Now, what is this in our minds now? Well, it's an area where smart money bought extremely heavily and then sold off heavily. Okay, so what have we created? Well, we've created this order block here that's only been mitigated a little bit, and we've also created this new area in here that is now, in our eyes, imbalanced, right? So we can be looking to sell or be sellers up around these areas right here. Okay, at this point, we are confirmed to be sellers here. Now, where could we be targeting? Okay, so it's not just as easy as saying we're going to sell there. We need to understand where we might want to be targeting. Okay, so the first areas we'd want to target is these lows right here and some lows here. So what we'll do is we'll get onto a higher time frame, taking a look at the hour chart, right? So now we can easily see that this was some kind of move that was sprung up by some kind of money getting involved, taking orders to continue lower. Okay, now, as we take a look, the only area of importance that we start to see is there's this huge area right here, right? So there's this mitigation block, but we can also think about that as this imbalance that we've looked at. So that's some of the imbalance. And then lower, we have more order blocks down here. But we also have to recognize that if this market does want to continue higher, where could it do that from? Well, we have this order block right here, right? You see this order block that moved down to grab lows, creating just a little bit of imbalance between right here and here. There's a very small bit of imbalance, but it still counts as an order block. So what I would do is I'd be looking to target this area at first, and then looking to target lows here, okay? So seeing this happen, we recognize this is an order block, right? We don't like how big this order block is, right? So the thing is, we could just set up a sell right here, right now, waiting for it to come back up, just like this, looking for first take profit here at about 1 to 2, which isn't terrible, and then a take profit right here about 1 to 5, okay? So this is this is a trade that counts. Smart money wise, it's correct, right? We're still only looking at one time frame, so this is not even top down analysis, but looking at price and how it's been moving in the form of grabbing liquidity, creating liquidity, grabbing order flow, breaking trend lines, making people think it's going to go higher, then continuing lower. This is a good sell right here, especially since most retail is going to be looking as this is a break, and then this old area of support to hold now, right? So a lot of retail is going to be looking for this higher prices, and as they're looking for that, we're looking for those lower prices, which is exactly what we want, because we're going to be taking and piggybacking off the orders that are laying all under these areas. Okay, so let's get to a very low time frame for just a second and consider the idea of imbalance and how to get into a better trade. Okay, so again, as we start doing this, let's think about what we have inside here. Right here, we have an area of imbalance too. So price could come up there, but also this little order block that was created right here is also an important area for us to consider in the future. Let's drop down a little bit lower, just take a look at this. And we'll notice that ultimately, this is that last order block that we can look at for potential entries, right? So we could be entering here, but we also could be entering here. What I'm going to do is, because it's not as clear here, is we're going to jump back onto the 30-minute and take a look at that imbalance that we highlighted, which was ultimately right here. And we're going to take a position off of half of that, just like this. Okay? So we're going to take a position off there. Stop loss just above the high. Okay? Targeting the lower prices. So let's zoom back in. Understand this is an order block. So of course, if you just want to be less risk averse, you can just be looking to enter here with a smaller risk to reward. If you want to be crazier, like I am, you can be on a much lower time frame, looking for a order block that forms in and around this area to grab that to the lower side. But right now, this is what we'd be expecting. Okay, so let's take a look what happens. So price continues to drop and starts to do what? Well, now we understand that price is stopping to create liquidity in these areas to make people start to buy, right? But we know that we're looking at this area as our area of importance, looking for price to come up there to mitigate, okay? So price begins to drop even lower. As it starts doing that, it's because it's creating more and more liquidity. Okay, so let's just zoom out, just do this and start watching this. Price starts dropping slowly, playing in or around this area. What is it doing right now? Okay, from our perspective, from institutional wise, we understand that we're starting to form liquidity on both sides of the market. Why? Because we need to build liquidity on each side so we can take it before dropping. Why? Because when we do that, we are grabbing liquidity in the form of what? in buys to mitigate out of older buys to get into more sells because we've built enough liquidity above these areas so then we can go lower, okay? So let's zoom out and watch this, okay? Now, as price breaks out of this area, what's happening in a retail mindset? People are starting to re-see this trend line. They're starting to get back in, right? Anticipating these lower prices. They're starting to see what form? This support that now became resistance, anticipating to see this downwards movement to continue lower. So what happens? We come up to that area, reject even more. This is what? A inverse hammer, a pin bar, whatever you want to call it. I don't know what retail calls it, but people are seeing this as a failure to go higher. So people are starting to get into these sells. Also on lower time frames, what are we starting to notice? There's most likely some kind of trend line being created, and then we break right through it, grabbing what? All the liquidity that lay above here, most likely targeting what? These highs right here, right? So on a lower time frame, we could be actually looking for entries off of maybe this breaker block to go higher. Maybe, I don't know. If you want to be a scalper, that's what you could be looking for. So we get a wick entry potentially off there. Maybe we don't, doesn't matter. We come up, we barely wick our entry. We still haven't gotten it. We've wicked our entry. Okay, so we've entered. Why did price come here again? Right now we can answer this question. Price came Price came here to mitigate this huge order block. Also, it came to this specific area. Why? Because it had imbalance here that we needed to fill, right? What's imbalance? It's an inefficiency. Why is it an inefficiency? Because when they bought here, they moved price so quickly that they created a lack of buyers or sellers on the other side. There's an inefficiency that we came to fill. Now that it's filled and we've mitigated our buys that were negative down here, what are we most likely going to do with smart money? Well, we're going to take price significantly lower, right? Where are we going to take price lower to? Well, this is where your own trading module comes in. Are you going to be someone who wants to trade one-to-one and then hold your position for a higher take profit at a newer area of inefficiency? Are you someone that just wants to hold your trade all the way through? Or are you someone that wants to hold your trade until a structural break happens and move your stop loss to break even and hold the rest until an important area that you've been looking at, such as this right here, right? You can see all this inefficiency that happened right here, inefficiency right here, and this breaker block right here. So we'd be expecting price to at least come to these areas, right? So let's expand this a little bit. Anticipating price wants to come here. That's why we're targeting this, and see what price wants to do, okay? So as we start watching this, price starts dropping off. Why? Well, now, what have we done? We've broken this trend line a second time. So what's happening? People are starting to buy. We've broken this shorter term trend line. So what's happening? More people are starting to buy. Also, what did we do? This old resistance has now become support. So what's going to happen in or around this area most likely? Maybe some kind of movement away from it for a second to do what? Create liquidity before we come lower to start grabbing all these areas of profit, right? So let's see what happens. So we come down a little bit more. Look at that. We come to wick this area. Why? Because we are creating liquidity for people that are going to get FOMO'd again and be afraid of missing out, which is also, as you can notice, some kind of touch of this trend line. So people are going to be expecting this higher prices. And what's happening? As they're expecting this higher prices, institutionally, we just noticed that we've filled an area of imbalance. We've mitigated out of an order block about halfway, which is even better. If you notice this, we could have just traded half of this order block, right? So that half of the order block is right about here. You can see how perfect that entry would have been. Of course, we didn't trade that because that's not what we were looking at. We were looking at that imbalance because we were looking at the most probable area of movement away from. And we understand that these small movements up and these wicks are not pressure to go higher. Instead, they're the creation of liquidity at areas where at areas where retail is going to become emotional, where they're going to start buying and we're going to sell right through those, right? Because when they start buying, they have stop losses. And what do we do with stop losses? If we're selling, we're using those stop losses to exit out of some of our sells, because the composite man or the smart money or big banks cannot just exit their positions whenever they feel like it. They need to create a cause for exiting those positions. And that's why they're going to create liquidity before coming even lower. Okay. So again, what's going to happen next? Most likely a drop through, right? Okay, so we have a drop through, but what do we have? As we drop through, we grab all the stop loss of these areas, and then what do? We wick ourselves up. What does this look like to retail again? Well, it looks like they might have gotten this one wrong, but this one's the correct one. So now we can finally start expecting that upwards movement because, you know, it just has to go up now. It doesn't make sense not to because there's this old resistance that now became support, so it should hold, and it's holding very well. And on a lower time frame, again, one more time we're going to do this fractally. what does it look like things are happening? Here it looks like there was an engulfing candle, so people are looking to buy all the way through here. Now they're not sure. Maybe we get one more movement up, right? Let's see if we do. There we go. We have this move up that actually breaks structure. People start to buy into this, right? We come down. We're testing this area again. People are starting to get involved. They're afraid of missing this, and then we start dropping through. So let's get back on a 30-minute, and there we have it. We start dropping through like wildfire because people are doing what at all these areas? They're looking to buy. Now, again, same question. What do you think we have happening here? Well, we're just creating liquidity. Why? Well, check out what we have in terms of retail mindsets. We're seeing what we like to call a head and shoulders, or what they like to call a head and shoulders. So what are they anticipating? That up movement, right? So we're going to anticipate a move through here, and then we're going to look at our trade and think about what we want to do. So we're doing all this up movement to create liquidity, right? Everyone's getting involved in buys here because they think that they're finally correct. They found their area to get into buys. We come back to it, showing more and more support, showing a willingness to hold, right? Showing more willingness to hold, right? What are we creating now? That same idea of a consolidation. So we can do what? Potentially grab the orders that rest above this. Why? Because tons of people are selling and then have buy stops above here. So we grab those orders to drop, right? So most likely, what can we expect? Some kind of order block to form now. Let's see if we do. Maybe we don't. We just drop through. Okay, so that's how you can start to anticipate your own smart money movements, by the way. If you see consolidation in an area where you expect price to continue lower, and you start seeing consolidation and then you see that move out and the continuation, you know that was to grab orders. So you can start getting into sells at those areas, okay? So price comes down to this area like we had noticed as an order block here. Doing what most likely? Potentially creating liquidity to come higher, to then continue dropping. So what we would do is potentially, based on your own idea of how you want to trade, you can take some profit here at 1 to 2, or you could leave this to run at 1 to 6 and put your stop loss at break even at this point, right? So you'd be risk free on this trade, just expecting a 1 to 6 payout if you won, right? So that's 6%, which is very nice. So we'll keep watching this. We come up. Why are we okay with seeing this up movement? Because we understand it's to create liquidity. We know that we're not trying to turn around, institutionally speaking, right? So we come up to create that liquidity, come up again to create that liquidity. Come into here, doing what? Creating, again, a support for people that want to start buying. And we kind of just drop through very quickly, making this area become what? A breaker block, looking for potentially lower prices, right? So on a lower time frame, what we could be doing is we could be looking for a Wyckoff and distribution in these areas. We haven't gone over Wyckoff yet, so we're not going to do that. Maybe in a future video. So what we do is we come up and then we drop. Now, most likely, what can we anticipate this move was? Well, this is that buy through some highs, that continuation lower, and what have we created when we did that? Well, look at this. We created a very easy to see area of imbalance right here, and we created this order block right here, right? This move up, that continuation down. So what we could look for potentially is a re-entry on this trade at maybe half this order block, right? Or let's just say the general order block right there, to go lower. So just like this, if it gets hit, stop loss just above the high, take profit at this area. So now we've created a 1 to 6 trade and a 1 to 6 trade, but this one's already risk-free. So we've created a 1 to 5 trade that's complete if it continues, and we've created an extra 1 to 6. So let's see what happens. So we start to drop very quickly. We come close to hitting this area, right? We can go left to take a look at what else we have within these areas. I don't really see much. So potentially we've missed this potential setup here. We drop into this. So maybe we close out this trade, but now this trade gets closed out at 1 to 6.76, okay? So let's continue watching what's going to happen. So price comes here, wicks off of it, right? Makes its way up slowly. We can just take a look at what price does at this area of, at this order block. So it comes very close, drops off quite heavily again. Generally, I don't see anything else right now. What we can do is play this a little bit faster, right? And that's where price ended. So we could be looking at this area in the future now, potentially. This is as what's it called? As far as price got. And what's also interesting is concerning risk management and how you can manage trade. You don't always have to just be targeting an area of inefficiency. You could be targeting in terms of structure, right? So when this broke, like I said, when it finally broke here, this would be your stop loss right here, right? So this would be your take profit. So you'd just be getting a 1-to-1 locked in. As this broke, your new stop loss would be here. As this all broke, your new stop loss would be right here, right? Continued, broke. After this break, where's that break happen from? Right here, right? So your take profit could have been right here, and that's where you could have exited at 1-to-5, right? But the cool thing about this is, yes, you wouldn't have made that 1-to-6 or 1-to-almost 7, but instead of that, what you could have done is you could have made this 1-to-5, and if price did continue going significantly lower, guess what? You'd start mitigating through all these areas, and you could be starting to load up on trades that are about 1-to-9 and even higher. So that's why smart money and understanding institutional order flow can become very helpful. And when you start to create your trading strategy around correct risk management, you can start to catch trades that might be small at first, take some profit off at 1-to-3, and let the rest run structurally, especially if you start to understand things like Wyckoff and how things want to move to areas of inefficiency and where they're trying to move on a higher time frame, that you can start to make a 1-to-3 of, making 1.5%, taking 50% off, and then letting the rest run for maybe 1-to-18, making an extra 9% on just letting it run a little bit, okay? So I hope this all made sense. In this video, what we did is we took all our concepts of what we understood so far in terms of just order blocks, imbalances, and the creation of liquidity, and merged that with ideas of how liquidity is formed for the other side and emotionally, and how people are trying to get involved in this market and getting stopped out with these movements through what? Through equal highs right here that then get taken out to get orders that end up filling and mitigating important areas like we've talked about to continue significantly lower, using older areas of order blocks to create what? More support resistance, creating more areas to mitigate, creating more what? Creating more order blocks before dropping harder. So what you'll notice is when we did look at this area, we were correct in anticipating that this was a breaker block that became an order block, right? So check this out. If we actually expanded this entire breaker block, it actually did get tested here. So this was a potential for re-entries. Notice how we did this kind of live. I know it was a replay tool, so I technically could have seen this all. But if you had if you were less risk averse and you didn't enter at just this order block and entered at the real breaker block, which was right here, you would have gotten into this trade perfectly with almost zero drawdown, with the stop loss that never got hit, with this continuation down that ended up breaking structure. So you could have mitigated up to here, or you could have just taken profit here where we were looking at an earlier time frame, right? Anticipating that most likely this area was going to be filled before some kind of movement away from it, right? So that's why this price came down here, specifically into this order block right here. As you can see, this is very low. That's why price came here and took off. So what can we most likely anticipate? I would still be anticipating the trades from here for lower prices to come below what we've now formed as liquidity in these areas, right? Otherwise, if price does continue to break up, we'd be looking for it to do what? To target that older order block right here, right? So remember we were talking about this earlier today when we started the replay. This is how you have to create a bias, and this is how your bias can change, but you can still be right. So despite being wrong on this 1-to-6 trade, let's say you lose 1 RR, you could be trading this breaker block in the form of some kind of accumulation in here that continues significantly higher to this area where you've now caught maybe a 1-to-16 or something even higher, right? And once we come here, what can we expect? Well, potentially move down to create liquidity and then a trade-off of some new breaker block to go higher. This is why you have to start merging your ideas of liquidity, of orders, order flow, higher time frames, order blocks, and imbalances to understand where price most likely wants to go and framing your trades around that, okay? Now, there's a lot more that goes into that in terms of how you're going to risk manage your trade, about how you're going to trade that trade, how you're going to get involved, and starting to create a strategy where you create a set of rules that you need to start noticing. So you're almost going to make the idea of institutional trading into an algorithmic rule, right? And if you watch my other videos where I've spoken about, I believe in the scalp intraday or swing trade video, I spoke about the two main ways to trade, which is algorithmically and institutionally. And by merging the two, by creating an algorithmic approach to an institutional approach, and then risk managing correctly within that, you can create a strategy that is unbeatable, okay? And in our next video, when we talk about profitability and how long it can take to become a full-on Forex trader or a profitable trader, we're going to touch on the idea that, in essence, I don't agree with a lot of traders that it can take years and years. It did for me. But the thing is, the correct dedication and the correct mindset and the correct strategy and employment of that strategy can create and make you into a profitable trader very quickly, right? In a year, a month, especially if you're working, especially with all the access we have now to prop firms, okay? So I know this video went on a little bit long. I wanted it to be special. We just hit 50 subs, which is amazing. I wanted you guys to understand my thought process as things like this unfold. Of course, this is not, this wasn't really real time, but I walked you through it like as if it was real time and how you would be anticipating movements. Keep in mind, this was on one time frame. It wasn't even looking at top-down approach. Of course, if we had a top-down approach, we'd be more likely to get into a better position. And if we were able to, of course, take a look at these entries here on a lower time frame and this entry here on a lower time frame, we could have noticed some kind of lower time frame imbalance or order block that we could have entered off to get an even bigger risk to reward, which is really fun. So what this video is kind of meant to do was to show you that, you know, it's possible to start learning and doing a lot with the things you have right now. But it's also to show you that there are tons of ways and things that you can start to trade with these concepts. You have the arsenal to start doing it. You can trade like me, which we will get into later, which I do with my clients, and they basically learn how to trade like me, looking top down. You can start to do your own version of trading, or you can create your own mini algorithm to trade institutionally and understand yourself and understand how you like to risk manage, right? Whether you like to get in on a very short time frame, hold right into profit, or if you're okay with taking a little bit of drawdown on a higher time frame and you don't really mind it, okay? So this was mentfx. This was episode 7. I hope you guys learned a lot from this. Please let me know in the comments if you did. Leave a like if you enjoyed it. Leave a dislike if you didn't. But please let me know what I could have done differently, because I'm here to help you guys improve. I love learning this stuff. I love employing it. I love teaching it. And I hope you guys get to the point where you can feel as passionate and interested in the market as I am. So thank you guys and enjoy.